You're welcome to the Economy and Politics Show. I'm Ottoabasi Abasiekong. This edition will discuss Nigeria's 2024 macroeconomic outlook. And to all our viewers, we're in the season of financial and economic outlooks for the year from global, national, subnationals, and corporates. Joining me virtually to discuss this today is Dr. Tilewa Adebajo, an economist and CEO of CFG Advisory. You're welcome to the show.
Thank you very much.
Thank you. Let us begin with the reality that Nigeria is in the stagflation phase, and CFG Advisory has projected an 18-month economic recovery period. How can the households navigate the challenges that accompany this cycle?
Thank you very much. The outlook season, as you said, what the CFG Advisory has said is the fact that the theme of our outlook is trying to find the path from stagflation to growth. And I'm happy that you focused on the household because the challenges for the household in terms of navigating this path is quite significant because Nigeria is in a situation whereby you have 133 million Nigerians in multidimensional poverty. Purchasing power is very weak, and we have about 43% unemployment rate, and we have developed what we now call a sachet economy. So purchasing power is pretty low. And for the household, inflation at 30%, especially food inflation in excess of 35%, is eating into their ability to be able to afford many things because prices have gone up significantly. The impact of the removal of the fuel subsidy is impacting households more than ever. Trying to get to work, transportation costs have gone up, food prices have gone up. Everything is going up, and at the end, unfortunately, their salaries are not going up as fast as a lot of all these prices are rising. So the challenge for the household is even more significant than we can imagine. And the household are making decisions as to what they will consume. And as you've seen, most of the retailers have also been responding in the sense that most of the retailers have sachets to be able to focus on the challenges of this whole inflation saga and the stagflation, unemployment, and the low growth the Nigerian economy is experiencing. So the impact has been more significant on the households.
Yeah, very, very significant and really impactful. And this is why it's very important, like you rightly said, that we begin to look at how policies can really trickle down because of the fact that everything is going up. But like you said, the wages and salaries are not going up. So how navigating is quite challenging. But for fiscal policy, I must commend the CFG Advisory, the macroeconomic outlook that came out, talking from stagflation to growth. That is where we need to be. One of your recommendations is debt restructuring. And that's very critical because we've seen what have happened to our neighbors in Ghana. I would like you to expatiate on this and give us your thoughts on the recent approval of the securitization of the outstanding 7.3 trillion naira ways and means debit balance in the Consolidated Revenue Fund. I also know that we published on ProShare your thoughts around the last one, the 22.7 trillion naira ways and means securitization and having what we call an SPV kind of approach.
Thank you very much. The ways and means, I think, is clearly one of the most significant challenges to the administration today. And if it's not managed properly, it could stall the economic recovery plans that are currently underway. As you know, these ways and means are now 30 trillion. And the argument that the CFG Advisory has had is the fact that securitization of ways and means financing is illegal. And that is clear by Section 38 of the CBN Act. You cannot securitize bonds and issue them in the name of central banks and give central bank bonds to be able to repay the ways and means. At the same time, also, the 30 trillion is so significant, you cannot push it into the capital markets because our capital markets does not have the capacity to absorb 30 trillion of this money at once. So these are the challenges you have with ways and means. So our suggestion has always been that, first of all, you need to find some remedial legislation because, you cannot send a request to the Senate to approve securitization of ways and means. What you can do is that you can ask the Senate to either repeal or amend Section 38 of the CBN Act and the various other restrictions that you might feel are hindering the current situation within the Fiscal Responsibility Act. So that has been our position for a very long time. So this is just a temporary solution to a significant problem, because it's this ways and means financing that is driving inflation. And inflation is the major bane of the economy. And as we said earlier, that's what's impacting the households. If you drop inflation down to significant levels, then you can achieve growth, and the economy can prosper, and the households would have more purchasing power, because now the inflation is not eating into their things. They can have more purchasing power, they can save, and there can be more prosperity within the economy.
Now, on the monetary policy side, your report had advocated for a competitive exchange rate to stimulate exports and reduce imports. How can Nigeria manage competitive and flexible markets with the current FX liquidity challenges? I mean, the issues that we're seeing in the markets.
Well, again, the FX liquidity challenges we have, I think, was as a result of the fact that revenues were not coming into government coffers, because they said they were spending $10 to $15 billion a year on fuel subsidies. So that's pretty significant. So hopefully, if that $10 billion comes back into the system, it will improve the FX liquidity, because oil is now selling in north of $75 a barrel. So that's pretty significant. At a point in time during the Yar'Adua administration, we had $18 billion in excess crude accounts. Today, that cannot be the case. So we don't have a buffer to see us through this problem. That is really the bane of the Nigerian economy. So that is the bane of our FX liquidity. So what we need to do now is to be able to restructure the FX market and move away from a static exchange rate mechanism. So I think the central bank needs to come out very quickly to come up with their new market exchange rate system, which is not static, so that when oil prices are high, we're making good liquidity, then the naira should be able to drop against the dollar. And when there's the dollar prices, when the oil prices are low and we don't have dollars, then maybe it could appreciate. But basically, there's an aberration. Oil prices are high. We're supposed to be making excess dollars and FX, and our exchange rates are supposed to be at a favorable position, but it's not. So you can see that there are distortions there. And these are the distortions that they need to correct. And then, of course, the central bank also has a program of inflation targeting. Now, these two programs are very critical to be able to restore market confidence. So the CBN has to launch these two programs, the inflation targeting program and the new FX system, which will allow trading within a band for foreign exchange. And so they launch these products because the market can no longer wait. And the delay is causing a bit of volatility, especially within the foreign exchange markets. Let's address the issue of a market system first, then we'll address the issue of liquidity. And I think that, as the year goes on, I believe that liquidity should invariably improve, because not only are we making savings on the subsidies, but then the Dangote refinery has also started production. So let us see how the refinery too will change the dynamics, because whatever it is, we will reduce, maybe not the first year, but there should be a reduction in import dependence for petroleum products.
Yeah, very, very clear from you, Dr. Tilewa. You're an economist, and of course, we know your rich background, and you've seen cycles across the country over the years. What's your last word to Nigerians? This is a really phenomenal year. What's your last word to everyone in this very phase?
Well, like we said in the report, we believe that the fundamentals of the Nigerian economy remain very strong. We have a sound economic management team in place, and the expectations are very high because the people in charge now, they know what's going on, and we know that they know what they're supposed to do. So we expect a lot from them. But in terms of looking at the historical trends, which you talk about the various cycles that we've observed, in the report, we looked at the relationship between GDP growth, interest rates, and inflation. And when we did a historical analysis and a regression of this, the correlations we found was that in 2011 and 2014, the Nigerian economy grew in excess of 8%. Why did this happen? It happened because at that point in time, inflation was between 10 and 12%, and interest rates was between 12 and 15%. So it makes sense, or it's very clear that the silver bullet for the Nigerian economy is that the monetary authorities should be able to make sure that they bring inflation and interest rates within this band. If they do that, then we will be assured of a minimum of 8% economic growth. And that is the silver bullet. With 8% economic growth, the 133 billion people for multidimensional people will be moved out of poverty. The consumers you talked about rightly and the households would now begin to have significant purchasing power. They will spend, and basically we can reflate the economy and move from what we call now stagflation to economic growth, and not only economic growth, but inclusive and sustained economic growth and recovery. So it's not very difficult. And as I've always said, the fundamentals of the Nigerian economy remain very sound. It's the management of the economy that has been the problem.
All right, 2024 is already set out for the monetary and, of course, the fiscal policy authorities. And let's hope that the issue of the inflation targeting and the foreign exchange market management framework is brought out on time so that stakeholders understand. And overall, the fiscal policy should be very clear. Thank you very much, Dr. Tilewa Adebajo, CEO of CFG Advisory, for your rich insights once again, and of course, for that incisive report from CFG, from stagflation to growth, which has really told us about the 18-month recovery period and, of course, the need for clarity and direction in policy. Thank you once again for the time, and Happy New Year to you once again. To our viewers, if you want to get further insights on this video, visit the ProShare website displayed on the screen and follow our social media platforms to engage further on the show. Till we come your way again, enrich yourself with the knowledge of socioeconomic developments around you, because it's a wise thing to do. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.